So with the S&P 500 about 1% from all-time highs, should investors sort of pivot to wait-and-see mode at this point? Let's talk about that right now. Marianne Montaigne's back with us, portfolio manager at Gradient Investments, and Richard Weiss is chief investment officer of multi-asset strategies for American Century Investments. Good to see you both. Thank you for joining us. Marianne, let me just start with you. The fact that we are this close to all-time highs, I guess the market is assuming that we get another package. Is that what you're thinking?
Well, I do think the market is assuming that we're getting something, and I think the president has acted as an instigator over the weekend. And with that, the question is it $1 trillion? Is it $2? Is it $3 trillion? And if we're talking at the upper end, then we're talking about adding to the federal debt and just putting us in line for further inflation down the road. Again, the amount of the dollars determines how far down the road. And that's why I think a lot of people have been turning to gold because of that risk of higher inflation. Yeah. Also, with the rising the falling of the U.S. dollar. Right. And then just the whole period leading up to an election, gold becomes a safe haven in volatile times, and we expect volatility between now and November 3rd. Yeah,
I was going to ask you about your gold position a little bit later, but you've already brought it up, but I'll get back to that in a moment here. Richard, all things being equal, how do you think the economy is doing right now, and is the market accurately reflecting that or anticipating a better economy down the road getting ahead of itself? What do you think?
Oh, all the above. The economy is treading water right now, right? Waiting bated breath on the fiscal package phase 4 here. The markets have obviously discounted $1.5 trillion to $2 trillion in this new phase and is looking past, admittedly, probably the coronavirus at this point. A market, as we all know, typically peers out 12, 18 months past, and hopefully by then we'll have a vaccine. It'll be widely disseminated and we'll be off and running again. The key issue, though, for investors is at what level do we come back to? After being this ill for a while, the so-called long-term scarring effects in the labor markets, that's where we have to keep our eye on for now, because it's not clear that once this is all over, that we'll be back to where we were. And I think that's going to hold the markets in a trading range for some time now.
The debate they were having last hour was, is it value or growth that you should be in right now, Richard? Where do you see the best opportunity right now?
Well, the value growth tug of war is episodic, right. Has been for decades. We have been and continue to lean towards domestic growth issues for a number of reasons, primarily momentum, low interest rates. And until you see the economy recovering, interest rates rising, and general health levels rising, we don't think value stocks are going to make a real comeback for a while.
Marianne, let me go back to your thoughts. I did want to talk about gold. The old debate before I retired was, is gold an inflation hedge or is it an investment platform right now? Is it a breath mint or is it a candy? Are you investing in gold just because the dollar's been going down? Is that why gold's been going up this year? Or is there an economic reason? Do you really think that inflation could come back at some point? We've been waiting for that for more than a decade.
Yeah, so the answer is yes. We've been anticipating that the dollar would fall against other countries, and also we do think that inflation will rear its ugly head. What's anticipated right now is a rate of maybe 1.4 to 2%, and I think that because of all this stimulus, that it's going to be more in the 3 to 5% area as the dust clears and looking out, probably 18 months or so from now. Right. So that is going to be an issue.